This week felt like a stabilizing week in the market. I'm Tony with Clarkson Santoro, and this is our real estate update for the week of Friday, June 12th. We know that selling or buying a home can be very stressful and confusing. That's why we do these weekly videos, so you can know how the market is affecting your options as both a home seller or a home buyer. Like always, we start off by looking at how the market performed over the past week. There are 87 homes active on the market, which is down from last week's 88, and the average asking price stayed the same. 11 homes went pending, which is one less than the 12 we had last week, but it's still a good number. Seeing anything in the double digits is great. And the average pending price on those pending sales jumped up $100,000 to $1,707,000. Fewer homes went closed this week, about half, but the average closing price was roughly similar, also $100,000 less than last week at $1,964,000, down from $2,068,000 we had last week. So now we know how the market performed over the past week. Next, we'll look at the indicators that help us determine where the market might be heading. But before we do that, if you find this information helpful, you can hit the subscribe button down below so you don't miss out on future updates. And while you're down there, why not hit that share button and send it to a friend also? Everyone deserves to be in the know about their local real estate market. Okay, let's look at how the market performed over the past week. Or the broader indicators, we already looked at how the market performed. Like I said, inventory levels stalled out last week, and this week the total dropped by 1. That obviously isn't a significant change, but it's a move in the right direction. After several weeks in a row with drastic increases, it's nice to see a reduction and that's a welcome sign of relief, even if it is only by 1. Because we've had 2 weeks of inventory levels leveling off and back-to-back weeks of double-digit pending sales, it's no surprise to see that our turnover rate has improved. It's still well below the 50% and even further below that 100% mark that we'd like to see, but it's up to 38%, a 10% percentage point jump over last week, which is great to see. It's an encouraging sign, and hopefully we can continue to have solid pending numbers in the coming weeks, which would continue to improve this turnover metric. With the dramatic drop in turnover rate that we saw the past month, it comes as no shock that the over-under number is finally showing prolonged signs of struggling. We had been staying, above the break-even line for most of the year, but here we are falling below it now. It fell 2,000 more below on average, but it's still less than 1% in that under range. So it's really still holding pretty steady at a break-even number. It's just more disappointing because this number has been performing so well despite all the other down metrics. So hopefully we'll see it recover here soon. While the over-under number has been dropping a little, we have actually seen the average closing price rebound. It came up $30,000 this week and is back to flirting with that, $1.9 to $2 million range that I've been talking about, assuming we'll settle into here. And like I said, it's up $30,000 this week, so just under that 1.9 range. The Triple Q Fund had a week of where that seemed pretty weak. Shouldn't say weak so many times, but you know what I'm saying. But it was able to rebound at the end to a very manageable reduction in value. It had dropped to 5% below last week's numbers before closing at just 2% below last week's numbers. So it's softening, but it's not horrible, and this comes after a significant growth over the early part of this year. Interest rates are sticking around 6.5%, and I think that's where we're going to live for a while now. They had come down last week, and now they're back up, all with just movements with 5 to 10 basis points at most. So nothing significantly different here over the past couple of weeks. With inflation spiking again, I think it's unlikely to see these rates come down significantly at all this summer. This week was a stop the bleeding type of week. Over the past month, the market has really started to slump with rising inventory and lowering turnover numbers. It was nice to see the negative regression stop and give the market a chance to catch up a little and catch its breath. The sales prices improving back into close to that 1.9 range is another good sign for the overall market. It demonstrates that home values are still holding pretty strong, even after a prolonged, softer market that we've seen over the past 2 years, really. If pending numbers can keep pace with the past 2 weeks, we will see inventory and turnover improve significantly. So that's what we're hoping for. Thank you for joining me on this weekly update. I hope it helps you understand how the market is impacting your options. Don't forget to hit the subscribe button down below and ring the notification bell so you can stay informed on how the market continues to shape up as we head into summer. And if you have any questions about how you can navigate this stressful and often confusing process of selling or buying a home, reach out to us directly or leave a comment down below. We're here to help guide you every step of the way. Have a safe weekend, and I'll see you next week with a new update.